Aloha, everyone, from a very sunny Maui. I hope you're having a great weekend so far. As we head into the new trading week, I do have four long positions. Three are brand new. One is an add position that we've already added to once already. However, none of the signals are amazing. And not only are none of the signals amazing, but none of the stocks are of extremely high quality, can slim quality, but they're all higher quality. They're all higher price stocks, higher average daily volume, most of them, except for MATW. But bottom line is, want to keep these all small. Want to keep my hand in the game because the market is still technically uptrending, even though there's a lot of things I do not like. The advanced decline line of the NYSE is strong, and overall, the market's holding in, and there's been a lot of bad news, and the market's been holding up. So though it doesn't look good, my long positions overall are great. I'm basically fully invested, 10% on the short side leverage, 90% long. So as long as that's the case, I'm going to keep swinging whenever the signals are here. So 1% in all the new long positions, 0.5% for the KBAL ad that I'll go over here. STBZ is the first one. STBZ, a pocket pivot point signal off its 10-day moving average. That's also right here off this support level. So strong support here. This area right here is going to be my first cut loss level. This is going to be my second cut loss level, and then I'm willing to give a third of the position all the way back here. If it loses its green bop before it gets back here or sells off on heavier volume, this support level won't come into play. But for now, what I want to do is go long, limit order at 26.20, stop at 25.67, 25.31, and 24.16. So we'll see if STBZ works. I'm expecting a measure move similar to the November to February move here, 25% move. I think that's very reasonable if the market continues or wants to recontinue its uptrend. Probably the best signal overall out of all of them today is MATW, or on Friday is MATW. Volume surge, BOP surge, price bouncing, candle over candle pattern right off the 200-day moving average right here. It already found support there once, heavily rejected the 50-day moving average, but on below average volume, maintained the green BOP, refining support. Cut loss levels right there. So I want to get long MATW at 65.55. Cut my loss if it moves below 64.45. And I'm clear as day. We risk very little, about 1 point to get a potential 10-point move to the old highs. And if it's a strong market, a breakout to new highs, I'll take it over and over and over. This is a funeral services stock. Defensive stocks have been showing up a lot in my scans lately. Food and beverage mainly, insurance, and then mine is drawing a blank right now. Utilities. They're starting to show up in my scans. And then funeral services have had a couple show up, and MATW is one of them. So once again, 65.55 the limit, 64.45 is my stop. Looking for a move at least to the old January highs, potential breakout. And then the best overall signal, SOJA. Look at that volume and BOP surge. Beautiful, right? With the pocket pivot point signal right off the 50-day moving average. It closed at the high of the day. Handle, candle over candle, hammer, bullish hammer candle over candle pattern. Beautiful, right? Well, it's the Southern Comp. It's a Series A 2015 6.25 preferred note that comes due in like 2075. So this thing isn't going to move a lot. But here's my rule. A signal's a signal's a signal. If I have capital, I put it in it. So SOJA, it's going to get the 1% of my account capital. I have it in the margin account. I almost 1% left over for it in the cash account, but after these long positions, if they all execute on Monday, I'll have no capital unless stops hit. But that's been the case actually the past few days. So with the new long signals, they're replacing any intraday stops that are hitting. But SOJA, I want to get long, limit 26.65, and then I want to carry 3 stops because I want to get out of it immediately if it doesn't move higher. 26.42. 26.42, 26.36, 26.25. That's what I want to do. So if it breaks this support right here, I'll be completely gone. And as you can see, that's what, a 65-cent risk. So once again, don't expect a lot, but I do expect SOJA to be able to get back to the old highs, and then I would assume or want it to then break out to new 52-week highs. And then there's trustworthy for now, KBAL. Back to back pocket pivot point signals. 1, 2, 3. So 3 in a row. Very nice. Above average volume on all 3. After BOP lost its green right there on the 4th, it's steadily accelerated each day. I would like to see BOP explode higher after retaking the green level on the very bottom here. I would like to see it try to explode back to these old levels, but it hasn't. But still, with the stock right at its 10 and 50-day moving average, even though the 20-day moving average is a little extended, I'm still willing to add to KBAL here. I want to do a limit order at 17. No chasing to the high of the day at 1706. This is the third ad. The 20-day moving average is extended, so I want to get it at 17. And then with this ad signal, I want to have 3 stops. The first stop right here, 1663. Second right there, 1645. The final one, 1625. It fails this level right here, this ad will be gone. Now, I had an ad the day before, and my first stop's here, second stop's here, and I'm willing to let that go back to the third. And the reason for that being, let's pull that back up there, is that even though it was extended from the 20-day moving average, the open body of that open candle bar, the 5-day moving average is on the inside, and the 10-day moving average is touching the bottom wick. As you can see on this price bar, the 5, 10, and 20 are not inside that open real body. So I want to keep some tight stops because it's a little extended. And like I said, overall, this market doesn't look good. So even though the NASDAQ, NYSE, S&P 500, and Dow Jones Industrial Average are all pulling back nicely to their 50-day moving average, the indexes I want to see hold are trading below and have already rejected it now once on the Russell 2000, actually technically twice. It got over it and then failed, and then it got back up to it and failed, all in March. And then you have the Dow Jones Transportation Average, can't even get back up to its 50-day moving average, and it's starting to curl lower. So all this concerns me. So once again, want to keep the long position small, don't want to swing for the fences. We get a follow through day, or we get a series of higher highs and higher lows. Let's say the NASDAQ takes out that March high, hits new all-time highs. Let's say the IWM takes out its March highs. I'll be good to go again. But once again, this market's still consolidating. There's more problems than not in the overall market. More distribution days are showing up. And as you can see, the big tall red bars, once again, where's the tall green bars? And go back to DIA, same similar situation. IWM, same similar situation. QQQ, same similar situation. So until that fixes, I want to be very careful here. All right, everyone. I'll see you on Monday. Aloha.